Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, November 18th. Okay, what I'd like to do this morning before we get into looking at the charts, I kind of want to summarize where we're at and put a few ideas in your head for how to handle going forward. Right now, as I see it, we're in a potentially pretty volatile period. I do not trust this market as far as I can throw it in terms of, piling in long without regard for anything else. We've got skyrocketing COVID cases. We've got shutdowns to certain differing degrees across the country, and they seem to be piling on day after day. That juxtaposed against the hope of vaccines in the spring, because we've got, some positive information. And I believe that information will continue to dribble out as we head towards Christmas and into the early days of January. So we've got two opposing forces. One, the reality of right now, which isn't looking so hot, versus the good news or the light at the end of the tunnel in the spring. So to put that into market perspective, they could pull 5% out of this market in a heartbeat, and really wouldn't need any kind of big justification to do that. I mean, they don't really have to have a reason anytime they pull the rug. But I think in this environment, that could happen at any time. So what I want you to do while things are relatively calm, take a look at your holdings, your book. See how much long exposure you have, and if you're comfortable with that. And then envision in your mind how you would hedge your position if you started to see a big sell-off begin underway. Because once that starts, it's going to knock you or anyone, me, off center when that giant red bar prints and you don't have a plan in place. So what I want to do is create that plan now while the seas are relatively calm. Have that right by our trade desk. Know the levels. Know how many contracts you may want to get for protection. And then you can decide, do you want to try to make money on a sell-off or just not lose any? That's the difference between hedging your long book out, so at the end of the day you're basically even, or are you going to go bigger to try to capture alpha on the sell-off? So once those plans are in place, if that day ever comes, we can just go to our action plan and execute rather than, sitting there with the deer in the headlights look of, what should we do now? That's not a great position to be in. And honestly, that was kind of how I felt a week and a half ago on the Pfizer news, when everything went ass backwards in a heartbeat and just kept on going. One of the biggest one-day reversals ever. So I don't want that to happen again from the standpoint of not being ready. So let's dive into the charts, and I'll kind of reference those levels that I see are potential places to, hey, something's different. We may be in for more selling. SPY 2 hour. We took a dip yesterday. We did not fill the gap completely before we reversed, and then we popped up and just oscillated a little bit. We, just like a consolidation type of a day. So in my mind, there's two levels. One, 360. That 360 level has been tagged several times. They cut through it once yesterday and quickly recovered it. So there's a level there at 360, and there's also a level at 357. If you're willing to give your portfolio a little bit of room, a little bit of wiggle room, I think you can stay comfortably long against 357. That is the midpoint of this trading range. But if 357 were to break here, I think you're going to get a fast move to 354 and with a real good chance to come back to 350. So that's a 7-point move. That would be something I'd want to capture. So for me, regardless of if I tried to game this little gap fill up here from 360 to 358 is beside the point. You can do that. That's fine. I think the real level for get hedges in place or get short for a alpha generating trade is 357. And then of course if 350 were to break, then we got a whole new ball game with these open gaps down here below. So 357 would be a level that I would certainly be keen on and watching closely. 30-minute chart just shows the oscillation in the afternoon. This 362 seems to be a pretty well-defined cap on the upside. You can see here we had a couple touches here, quite a number of touches yesterday afternoon, reaching up to 362, getting turned back every time. If price breaks above 362, I think you can be long and look for 364. Any break above 364 sends price to new highs, and that would be certainly a place where you could add to any long that you had or initiate a new position as price breaks to new highs. But as we discussed, any downside coming down to fill this gap and then below 357, I think you're going to be coming down here to 352, 350 to test the low end of the range again. Qs. This 293 seems to be a problem. We've been stuck here for 2 days and price has not been able to break above. You can see momentum has gone flat. We've gone past this uptrend line, but we haven't really rolled over yet. I think today, you can stay short against this 293 level and look for 290. But as far as hedging or trying to make some big play, I think 290 is your level. A break below 290 would open up the door to 287. I think that move would come quickly, and I think you'd come back down here to 285 to test this gap and likely fill it down to 284. I think the Qs are going to be remaining weak. That doesn't mean they can't advance. I just think they're going to be underperforming for a while. And like I said, that doesn't mean necessarily that they sell off hard. They just may oscillate, move a little higher, move a little lower, but no wholesale rug pull unless they hit the whole market. So tactically today, I think you can stay short against 293 and look for 290. Strategically, below 290, I would be thinking about hedges or outright bolder put positions for a anticipated move down towards 287, 285. Here we've got the 30-minute dropped out of this channel. You can see here how it struggled with this 293 level, and now the door is open towards 290 and then 288 with potential moves towards these open gaps. IWM was the weakest out of the gate yesterday, did not fill the gap completely, fell shy. They reversed it right at the trend line and then actually broke out to new highs. I think you can stay long here. I would be cautious on any move back below 177. I think a move below that level would open the door for a move back to the gap at 175 and to potentially fill it. For me, a break below 173 would be an important level as far as getting some puts. Here's why. We had a well-defined trading range between 173 and 170. If we go all the way out, break out to new highs, then come back into this trading range, that would make all this look fake. And I think there would be a good chance of a fast move down to 170. And remember, we have got an open gap from 170 all the way down to 164. And so I just assume anchor a short position here at 173 and look for 170. And then if you get that move, you can roll down your strikes and, harvest the profit there, and then look for a continuation down to potentially fill that gap if any, big problems persist. You can see the negative divergence that we still have on price on IWM. Here we've broken out to new highs, but momentum is at the lows. That's not usually a great sign. So we'll just see if 177 can hold and then it continues to ramp, or if they bring it back. Just keep in mind these old gap levels will most likely remain important. And then once that gap fills, then the levels become 173 and then down here in this little gap and then lower. Facebook. I made a change here on a level. I had this line at 275, and it was obvious that price had found a new level just below at 273.50, where it had found support a number of times. So I moved the line down to 273.50. Very much the same play as we've been discussing over the last couple days as Facebook has gone soggy. I think you can be long against 273.50 and look for a push back up to the top of the box near 280. But on any break below 273.50, I think you got to lean bearish and look for 265 for a back test of this prior low. Apple's been holding up pretty well, but it did have this breakout yesterday, and now at the close had dropped back below. Pre-market, I was taking a look at it, looked to be trading right around 119. I think in that posture, I would favor a move back to 118 to test this prior low back here and then see if there's a reaction. If it's in the middle of the range, you know how I feel. I don't like taking that trade there. If it pops up to 120 and you want to fade it, that's fine. Then you can set your stop right above and then look for that move down to 118. If it doesn't give you that opportunity, I would just key off a 118. If it holds, you can try a long for a bounce back up to 120. But if it fails, I think 115 comes up pretty quickly. Tesla. I was surprised that they faded this that hard yesterday. I thought that it would hold its bids for the most part, and it did not. So if you recognize that right away and you got short against 460, you had a hell of a day, because you got a flush down to 433. So that was basically a $30 trade for you. Kudos for you. If you were watching it, you had a second entry right here at 450 to get short, and that still provided you a nice $20 trade. So now we're back to the same levels that we've been watching forever. 430 is your pivot. Anything north of 430, you can look for 450, and then above 450, you can look for 465. Anything below 430, number one, you're going to be in this big gap. But number two, your first target would be 420, and then 410, and then 402-ish, and then 390. I'm not saying it's going there. I'm just pointing out the levels that we've had all along that have worked well. So, first up this morning, do you get a kickback to 450, or do you get a move to 430 in the top of this gap, where you can decide whether it's going to hold for a long or if it's going to break for a move to 420. So, anyways, that's how Tesla sits. Microsoft has been weak. We had a trade idea yesterday in the morning notes talking about this 217 being a problem, and you could have been short that. That trade turned out to work out fine. You got $2 or $3 out of it as price moved down throughout the day down to this 214. Now I think for today, your pivot level is 213. That's got to hold, or else we're back here at the prior low at 209.50. If it holds, you've got a potential for a bounce back up to 217, which is $4. That's a nice trade. So Microsoft has been weak. Notice the PPO has not broken back above the zero line, and neither has RSI broken back above 50. So the posture of the indicators is bearish, and the price action is bearish as well. I would continue to lean to the short side here until price can prove it can hold, a specific level where the buyers may step in. Amazon had held this 31.50 most of the day and then gave it up right at the end. I think the 31.50 level is your pivot today. As long as it's below, I think you can look for 3,100 and possibly 30.50. Those $50 increments have worked great. If you see a recapture of 31.50, I think you can be long and look for 3,200. So I think today is pretty clear on Amazon. 31.50 is your level of interest. Above is okay for bulls, and below is okay for bears. Google. I mean, as far as I can tell, it's just, meandering inside this wide trading range, this $75 trading range. Notice that at 1795 it's been a problem. Notice the bearish divergence. Here we were at momentum highs and RSI highs. We came back up to the same level, but at much lower momentum and lower RSI. So it's been a slow fade here. In the range, if you're nimble, you can use this 1770 as a level to shoot against. Otherwise, just wait for a really objective level, either at 1795 or 1720, to take a trading bias. Netflix did absolutely nothing yesterday, so it's just oscillating at this 480. That is your pivot. Above, you can look for 487 and then 494, but below favors a move to 465 to backtest this prior low. So, okay, quick recap. We're in a choppy market. I believe the bias is higher. I've been comfortable peeling in slowly but surely long positions in cyclical sectors that I believe will do well, that have good, strong technical setups with lines in the sand to shoot against. That said, putting together a plan for how I want to either hedge that out or put on a bigger short to make any kind of sell-off be a money-making event. Certainly don't want to lose a bunch of positions and a bunch of profitability on any kind of pullback. Most of our options are positioned in December, and unless you acted really quickly to say, okay, close everything out, you'll get hurt on any kind of a quick pullback. So put your thinking cap on, decide how you're going to handle a pullback that comes out of thin air, and that way you'll be able to keep your composure a lot better in the heat of battle when you see a lot of red bars, and that's usually an easy time where you can be knocked off your center and make a lot of hasty, quick decisions that may turn out to be wrong. So spend some time on that today. Let's leave it there. Let's see how futures go. Also, one last thing. Futures were red most of the night, and then they've rallied here this morning. Every time when you come in, especially if you're trading indexes, mark the high and the low. The pre-market high and the pre-market low, those tend to be magnets during the regular session. So that's always a key reference point for me. On the upside, did we take out the pre-market high? If we did, that's usually a very good sign. If we got stopped at the pre-market high, then that can be a time where you can put on a tactical short if it's at a decent level and there's some resistance there. And likewise on the downside, did the down move that we just had, did it just come down to the pre-market low and stop on a dime? If it did, it may be a good long, having done that technical move of checking the pre-market low and validating it. Often that's a great time to take a long, especially if it coincides with one of your other support levels that you can clearly draw a line, for and shoot against. Or, hey, that sell bar just broke the pre-market low. Something's new, something's different now. That may turn into something more to the downside, and it may be a location where you can add a tactical short and then look to cover at a lower support level. So I hope that helps. Okay, guys, if you're new here, thank you very much for the time. I hope you like what you've heard. If so, please subscribe to the channel and let your friends know as well. They may be also to be able to benefit from the content. Hit that alarm bell. You'll never miss when I publish new information. Also in the show notes are links to the blog site where you'll find new and different information, helpful articles, etc. And a link to how to register for all my content. And then you'll get an invite to our trading room and an email every time I publish. So you'll get something very handy right to your email box each and every time I send out new content. So have a good day of trading. Thanks for your time. This has been Chris Buss with Traders Profit Compass. Talk to you next time.